This is Ron Brown again. I'm going to do one more video on the 21st of November, and this time I'm going to show you the linkage between my warehouse views and the chart views so we can start doing some analysis. This is my standard warehouse view. I'm going to bring up the Quick Pick menu and show you that I'm under my number one folder, and since it's intraday I'm going to use 1A, which displays the data. This is the end of day data. This is the intraday data, and this is the way it's set up. These are all of the columns which you see down here in the warehouse view. Now I realize there's a lot of information in here, but it all means something to me, and if you are using the software, you can create your own warehouse views. But let's just take a look at this. I have just a standard filter in here. Stocks over $1, common stock, belong to an industry group, or group index equals yes if I want to apply this to the industry groups. And then a combo rank. A combo rank drives the stocks to the top of the list based upon certain fields. The fields I'm using are the intraday range weighted at 50% and the intraday percentage price change 1 day. And what that does, when I'm sorted on this raw combo column, it brings the stocks that are moving up the most and are trading high in their range. Now I am in the NASDAQ 100 here. I did that purposely to eliminate cheap stocks because I just wanted to show you some more well-known stocks. If you look in the designer, you can see under the major market index components, you'll see the Dow, the transports, utilities, NASDAQ, Russell, and so on, all the S&P indexes and the SOX. So the market, as I'm doing this, the comp, the NASDAQ composite, is down 88. It's been weak today. I believe there's a Fed announcement later, so that's what the market's waiting on. But let's just start here at the top. This is Kraft Heinz Company, and you can see the raw combo is sorted with the arrow up. I think I'll bring in my arrow here and point this stuff out. Here's the last date. I know the earnings are out because the next earnings date is February 21st. This information reflects last night on the Wyckoff indicator. The volume was less than average, the spread was narrow, and the close was high. So if we look at the chart, I don't have the correct chart up here, so let me just double click on it. And by the way, I have a layout here of a monthly, weekly, and a daily chart. So getting back to this, I'll bring the arrow back up. Volume was less than average, and you can see that it was less than average yesterday. The spread was narrow. That's a narrow spread, and the close was high. You can see that it closed in the upper part of its range. Now if I deactivate this arrow and click on this same information, less than average, narrow, and high, you'll find right here. This is yesterday's data. If you want the results for the current day, you click on the current bar and it tells you that the volume is low, below average is the spread, and the close is very high. Next, I can look here and see the days since the 3 crossed the 6 was 14 days ago. 0 is the crossover day. And the days since the VPOC turned positive, or the volume point of control 10 day, is 6 days, with 0 being the crossover day. So the 3 crossed the 6 14 days ago. This crossed 6 days ago. That tells me that there was a pullback, a slight pullback, during that 14-day period after the 3 crossed the 6. And if you look over here, you're going to see that pullback period right here where the market or the stock pulled back a little bit and the bears regained control temporarily for a couple of days, and then it turned positive again, which would have been 6 days ago. This is 6 days ago. Now looking at this is 14 days ago. So the 3 crossed the 6 14 days ago, and you see it right there. Now there was no VPA flag on that day, so by scanning with scans that I have set up in the warehouse views, I would know that this stock crossed to the upside when the 3 crossed the 6. Now I'm going to click on that quick pick again. I have to deactivate this. Quick pick. And going down this list, you can see that the crossover days are here when I click on 3A. This is a 0 in the volume point of control, days since the crossover. So these stocks crossed over today, and JD.com crossed over, 3 crossing the 6 5 days ago, but the stock is down today. Let's just bring it up and see what's going on. So there was heavy volume in here. See the big volume spike as that gapped up. I believe that was probably on earnings, and it's just hanging around here right now. But this is demand, and here is the cause, the volume. Here's the effect, but what do we have? We have a spinning top. So it was bullish because of the gap up, but that bullishness is tempered by this spinning top. Or some would classify it as a doji. It just means uncertainty. And then the next day it gapped lower, but it closed near the high, and the 3 did stay above the 6. Today the stock is down, probably in sympathy with the market. But also, looking at this chart, I can see that the group is turned down. I just rebuilt the groups a little while ago, and it's turned down. This stock is still in a strong downtrend based upon the fan. And looking over here, look at the weekly chart, and the monthly chart and the weekly chart. We're seeing some buying here. Here's a low volume test, confirmation of that test. No supply, strength seen returning. So there is buying. These 4 weeks here are represented right in here. So the buy was yesterday based upon the volume point of control. So with the 3 still above the 6, I would say the bulls are probably still in control of this stock, but there's a lot of overhead resistance with this fan and also the monthly downtrend. But there is some buying going on. Look at this heavy volume last week. Now for the other column, 3 crossing the 6. 3 and 6 crossover would be 4A. These, you can see looking down this column, I have a 2-day window on the crossover. Palo Alto Networks crossed over yesterday and the day before with the volume point of control. So let's bring Palo Alto up. Okay, and then I'll put a crossover on alternate C. Here's the crossover right here. It gapped down more than likely after earnings, and the crossover occurred here. Once again, there were no VPA flags. But even with the absence of a VPA flag, if you look at this day right here, you'll see a blue bar around the volume, and that suggests that there is heavy buying because it opened here, traded down here, and closed near the top of its daily range, about in the upper 3/4. And then there was a slight gap opening the next day, traded up, pulled back a little bit. Volume pulled back, but still above average. If it's above this blue line, it's above average. So there is demand, and then there's more demand here, and volume's falling off a little bit now. But on this gap down, buyers stepped in, institutions stepped in to take advantage of that pullback. One thing about long-term charts, they usually dominate. So looking over here at the monthly chart, the monthly chart is up. It's a series of higher highs and lower lows. The weekly chart was up to this point and then a sharp pullback, then a gap up, and it is trading near its all-time high, as is the monthly chart. So there has been a lot of demand in here, but see how you get a totally different perspective looking at the monthly when compared to the weekly, when compared to the daily. The daily is used for management, for entries, exits, putting support and resistance lines on, and so on. And you can see right here, well, I need to do this, right here that it is up against resistance on the daily chart, same thing on the weekly chart, same on the monthly. So it's got to get past that. Just out of curiosity, I'm going to make this full, and you can see that on the monthly chart going back to 2012, this stock is trading near an all-time high. The fan is up on this, even though it's a little bit compressed here on some of these moving averages. This is building a cause. I talked about cause in the last video. It's building a cause to break one way or the other. It looks like it's going to try to go higher. We'll see about that, but right now it is currently on a buy. Let's take a look at another stock. Let's just take a look at Ross Stores quickly. Let's start over here on the left on the monthly chart. It's in an uptrend on the monthly chart with a series of, this is a higher low, of course, here's a higher low, and then it is near an all-time high also, I believe. So there's a lot of strength in this stock. On the weekly chart, we are seeing that it is about ready to break above the prior week's high. So there is a lot of strength here. This is a no supply. This is a strength seen returning. Now let's go over here and look and see where there were buy points on this. This is 1 and 1. This is recent after the gap up. You can see looking here that there was one down day. This is a shakeout before earnings, evidently, which caused the 3 to go below the 6. Also, the VPOC to turn negative. The 6 stayed above the 18, and the 18 was above the 50, of course. And then there was this big volume spike with the volume pocket pivot on earnings, and it little profit taking initially, but here is the gap up, and if that gap is protected, if the market makers and so on continue to support this stock, I expect it will probably go higher. Once again, there's a lack of VPA flags here, but going back here, this one, take this off so you can see what it is. It was a strength seen returning after a downtrend, and this confirms that strength. And look at the 2 blue bars and the 3 crossing the 6. This was the place to get in. This is a shakeout right here. And I imagine it was a shakeout going in to earnings. Like I said, I would have to check the news on it. There is a VPA flag here. It's a circle. It just means that there was a transfer of ownership. What does that mean? It means that buyers stepped in and pushed it up here, but sellers took profits. So it transferred from strong hands at the high to weaker hands. That's all it means, a transfer of ownership. It was just weak for a day, though, because it opened higher the next day, and now it's trading at its high of the day, and it is looking for an all-time high also. Okay, so let me finish going across this warehouse, and then I'm going to end this video. This is information I find pertinent. The relative strength calculated by HGSI, and also Kirkpatrick, which is based upon 26 weekly closes. Here's the intraday date, the intraday last price, the intraday one-day change, the range, volume compared to 90-day moving average volume, demand supply, the industry, the sector, the industry percentage price change today, and then over 5 days. If this is a box stock, that's something that I'm not going to discuss. It just means stocks with consistent earnings, but a box 7 is a turnaround stock. Doesn't look like a turnaround stock to me, but if you look at the numbers here, you can see that the revenue and earnings, the red and blue lines are going up, and then they collapse for a while, and then the stock turned around as far as fundamentals. That's why it's a box 7 stock, and it looks very strong right now. Okay, then VPA signal, no. If there's a VPA signal, it's going to say yes, and it will give the VPA signal here. And then this is the signal from the prior day. As I go across here, this is the long-term trend, which is right here. The medium trend, and then the short trends, they're right here beside it. That information is in here. Here's the stock I'm on. Is the fan up? Yes or no? Is the fan down? Yes or no? A fan can be neutral. It doesn't have to be either or. And then accumulation distribution, A through E. EPS rank, 63. All this information is all up in here also. EPS rank, relative strength, group rank, which equals ERG, the three totals, total up to this number here. And then I have the close to the 52-week high, only down 1.4%, 30.7% above the 52-week low. And then these are the numbers for the 52-week high and low. And then the high date, 52-week high date. And then finally, the days since the 52-week high was established. So on this one, it was 3 days ago. Right there is the 52-week high. So I glance at all that information. It's here. The fields are pretty uniform throughout the program. Several months ago, I went in and tried to make everything uniform. You may find a few discrepancies, but this is all the pertinent information that I need. Now, that's it for this video. I'll be doing getting into scanning for VPA flags, and also scanning for crossovers where we have an opportunity to get into stock or get out based upon crossovers, whether there is a VPA flag or not. But it's all going to be integrated together, as you'll see. Thanks for listening.